Well, I look after credit risk at Envision Financial, which is part of First West Credit Union. First West Credit Union is made up of two brands, Envision Financial, which has branches in the Fraser Valley and the Lower Mainland, and Valley First, which has branches in the interior. And my role at Envision Financial is to manage credit risk in our commercial and retail portfolios, which are about $3.8 billion. Well, today I think things are changing a lot. There is a lot of transformational change in the financial services industry. There's still the fundamentals are there, and they will always be there. Products like residential mortgages, those are commoditized, and they'll always be there. But where the transformation is happening is with new entrants to the industry, entrants that are now providing quasi-financial services such as payments and the ability of to provide liquidity to individuals wherever they want, whenever they want, and those are not traditional or conventional financial institutions. So that's a transformational change that's affecting the banking industry in general, whether it's the chartered banks or the credit unions in Canada, and the same applies to the United States.
Going forward.
Well, so going back to the answer of the first question, I think one of the challenges is for the conventional financial institutions to keep up with the new entrants, such as Google, with providing similar financial services, and also being able to actually provide the technological services that the customers of the future will be looking for. The millennial generation is looking for a different type of service that us and our parents were looking for. So all financial institutions across North America have to cater to that generation, because they're the people who are going to have all the money in the future. And if we can't attract them, in a way that allows them to do banking, on their smartphone, it's likely that we're going to lose them as customers. We won't be able to attract them. So there's a huge amount of investment and competition in the marketplace in trying to provide cool technology that is available on smartphones to provide banking services to people on the go. And the millennial generation is that type of person who wants that. So, and it's very expensive to do that. Small financial institutions will find it very hard to do that. You have to become part of the larger institution to be able to do that. The largest banks in North America are actually able, they can afford to do that. The credit unions are probably the ones that will be most challenged, because they have to become part of the larger group, and that's why, for us, First West Credit Union, which is a business model that is an umbrella for several brands, has come together because we realize that this is what we need to do. This is a huge challenge for us, and to invest in the technology that we need to provide to become competitive and remain competitive requires us to do that. Well, the opportunities really are in trying to use that technology to differentiate yourself from others, because when you look at the conventional products that we offer our members and the banks offer their customers, they're very similar. Checking accounts, various types of savings accounts, the residential mortgage, all these types of ubiquitous products are very conventional and very commoditized. So where you can become unique as a financial institution is how you provide that technological aspect of your services, because there's a lot of room to be different, and each financial institution can have a different take on the technology from others. And so if you have the right talent working for you, you can actually develop a technology that will make you different from others. I mean, I'll give you an example. Today, there's very few financial institutions in Canada that allow their customers to actually deposit checks without actually having to go to a branch. So, First West Credit Union is one of those financial institutions. CIBC is one of the banks that provide that service, whereby you can use your smartphone to take a photo of the check, and it automatically gets deposited in your account. So you can have different iterations of that technology that appeals to a certain niche of customers, whether they're business customers or individual customers. So that's really where the huge opportunity is. Well, I think probably the one aspect in the industry that's also going to be a challenge in the future is with all this new technology, how do you make it secure for the user? Because again, you're using a smartphone more and more often to access your banking account, and so far, cybercrime hasn't been a major issue, but eventually it will be, and the banking industry has to pay a lot of attention to that. So that would be a challenge and an opportunity at the same time in the future. So in speaking about the financial services industry as far as what the challenges are today for credit unions and how they can cope with them. So there's probably two components to this. There's a financial component and there's a technological component. And then there's a third component which is sort of covered by both, and that's basically being able to retain talent. But that's pretty much a challenge that's faced by many organizations today, not just credit unions or banks. But to speak about some of the financial challenges that credit unions face today, as you know, the way the banking industry works is that we raise deposits at lower rates, and then we lend the same money at higher rates. That's a very simple sort of equation. The way the banks work is that they have the ability to raise deposits from their customers, but they also have the ability to go to the capital markets and sell bonds or sell shares to raise liquidity in order to lend it. So the credit unions can't do that because credit unions don't have the ability to sell bonds. They're not publicly traded companies. They're not rated by the rating agencies, so we can't issue bonds, we can't sell shares, whereas the banks can. So we have a total dependence on our ability to raise deposits in order to be able to lend. So that's one of the biggest differences between banks and credit unions, is that the banks actually have the ability to control their cost on how they raise money, because they can sell if their bonds are highly rated. So AAA bonds basically have a very low interest rate, so the bank doesn't have to pay too much in order to raise money from the capital markets. Whereas for a credit union, if we have a lot of opportunities to lend money to our customers and we don't have the ability to get those funds from our depositors, we have to increase our deposit rates in order to attract that money. And once we increase our deposit rates, then that margin between the rate we pay on the deposits and the rate we earn on our loans shrinks. And that's what we're facing today as an industry in British Columbia and across Canada, is that credit unions are facing a significant decrease in the spread that they earn between their deposits and their loans, whereas the banks really are not suffering to the same extent, because they have the ability to go anywhere in the world and sell their bonds, sell their shares on the open market at lower rates, and basically be able to generate liquidity in order to lend. So that's one of the biggest challenges that the credit union industry across Canada faces today. The other challenge, and I talked about the technical challenge, the other challenge is really our ability to be able to offer the technology that that our current customers, our future customers are looking for, to be able to do their banking without having actually to go to a branch to do banking. Today, if we were to look at how banks and credit unions serve their customers, you have to provide as many channels as possible for a customer to do business with you. Because if you only tell your customer that the only way I'm going to do business with you is you have to come to my branch, well, you're not going to be doing much business, really. You have to allow them to do business online, to do business through their smartphone, to come to the branch, or even for you to go to them in order to provide them with financial services. So you have to have a multi-channel approach in order to be able to deliver service and be competitive. So the technical part, which is basically providing the technology that allows, let's say, a smaller credit union to offer its customers or members the ability to deposit a check virtually, i.e. without having to go to a branch and deposit a check. Let's say I'm a small business owner and I get 10 checks per day from my customers. So, well, okay, at some point I have to go to the branch and deposit those checks. well, okay, what if I, as a financial institution, provide this business owner with the ability to deposit the checks virtually by taking photos of the check on their smartphone and then sending that photo through an app to the credit union without actually having to go to the branch, and then that check gets deposited automatically in their account. Okay, so there are banks that are providing this service today. There are large credit unions that are providing this service today, but there are many small credit unions that cannot afford to provide this service today, and they will never be able to because it's too expensive for them. So what will happen is that you're going to find a mass migration over time by people who are too busy to go to a branch to those financial institutions that can provide them with that capability to do their banking online and on the go through their smartphone. If you can't do that, at some point in the future, you won't be able to compete as a financial institution. So today, we find ourselves as credit unions trying to struggle to buy that technology and develop that technology so that we can keep up with the banks that have the ability to pay tens of millions of dollars to get that technology. And sometimes what happens is that as a single credit union, you can't do it. You have to get together with other credit unions as a whole group and then be able to buy that technology and offer it to your customers. So those really, talking about the financial aspect, being able to earn a reasonable profit, and then being able to keep up with the change on the technical side of things, those are the two major challenges that we have today. The technical aspect will probably continue with us for quite some time, because if you look at how the population in Canada is shifting today, we have the Millennial generation, which is they are the professionals of the future. They don't want to go to branches, really. They just want to do banking, while they're having a burger and looking at their smartphone. There's another generation, the boomers, that are now beginning to retire and will be retiring, en masse in the next 10 years. They're also not really interested in regular financial services because now they're retired. They probably have their pension, they have their investments, and they live off that. They don't actually have kids who require car loans. They don't have mortgages that require to be paid. They're not going to be buying new homes. So, those two very distinct groups have very distinct needs, and all financial institutions have to cater to them because they're the biggest customers of the future. So when I speak about the other challenge that I said is across all organizations, which is retaining talent, one of the biggest challenges we face today is trying to get young people interested in working in the banking industry. The challenge there is that in the banking industry, you really can't just graduate from university and get a VP job at a bank or credit union, right? You have to start at the wicket line. Right, at the wicket, basically. Well, I don't think that you're going to find a lot of people, especially, the younger generation who just graduated from university, after they got their bachelor's or master's degree or MBA, willing to go and work behind the wicket, at a bank or credit union for very long. So what we find today is a lot of our teams that work at the branches, they are part-time people. You will hardly find a full-time employee working at a branch serving customers because they only consider it as a temporary job. It's a stepping stone for them, right? So it's very hard because, how can you provide good customer experience if every 2-3 months that customer sees a new face serving them? They find you have this huge turnover and staffing at the branches, which is really not very good from a customer experience perspective. And the same applies for the banks are experiencing the exact same situation. So whether the customer is an individual or a business, they're always complaining about, well, I had this guy or my account manager changed 3 times last year. I'm going to move to another bank or credit union. I don't like this service anymore. So, and then they find that it's the same thing, in the other institutions. So that one of the difficulties is that how do we attract the younger generation to work in financial services, and convince them that you can actually start at the branch and then move up over time, because they really don't have the patience for that. So that's one of the challenges that we face today, is how do we get talent and keep it, and make sure that we can actually show somebody a career path for the future, and not lose them to some other profession. So I think I'll stop here.
I love what you're saying, because that's what we're all teaching about here. So you're just great. There'll be so many opportunities for my students to help you with those problems. Any questions before we move on, particularly from Mohamed?